Hello, this is Patrick. Welcome to Chart Built Wealth, profitable investing with technical analysis. Well, I wanted to reiterate my buy on GSG, the iShares commodity index. I had a great week, but uh, it pulled back a lot on Friday, and so I think it's created a time to add. So let's get into it. Okay, so these are the holdings. So those of you that have been listening to my YouTube channel know that 18 months ago to 2 years ago, I was super bullish on gold, silver, platinum, platinum maybe 8 or 9 months ago, uranium maybe a month ago. And then I went to neutral on those and said, these things are way overdone. There's a lot of risk. Your retail investors are piling into this. All your crypto knuckleheads that put their whole portfolio in something like that. They were doing the same in gold and silver and some of these other precious metals. Over the last 3 months, I've been saying I think there's going to be a transition here from metals, from precious metals to energy. And that would include crude oil and natural gas. And so I initiated on this GSG, this iShares commodity index back on August 31st at 2277. I'm going to show you that chart in a little bit. But the reason why I chose this over, say, DBC, which is here you got energy is 70% of the index. In DBC, another commodity index, it's only about 40%. And I really wanted energy. So that's why I suggested this. It's also broad-based. You're not putting all your eggs in one basket. Agricultural, 16%, which I think are near really significant lows. Industrial metals, copper, aluminum, um, which were running up since, September, October, November, December, January, since I've owned this. I've done extremely well. I don't really have an opinion on livestock. I don't really follow it. And then precious metals, of course, gold and silver. It gave you some exposure without all the risk. And then in between that, I had platinum as one of my buy recommendations on the channel, and I had uranium as a buy recommendation on my channel. So we've had plenty of precious metals, and we were able to sidestep the big decline that we just had. I don't think it's over yet, but I will be watching it. So energy heavy, which is what we want. Why do we want, what made me bullish on energy besides the chart? Crude oil, crude oil was really had the sentiment on crude oil was really, really low. But the commercials, the big boys, were at their biggest bullish position since 2016. So that's telling. The smart money, the Chevrons, the Exxons, they have a pretty good idea more than than a retail investor on where we're going to see um, crude oil go. Also, seasonality went bullish in January, so until July. So this is the chart. Here was the big bear market. And this kind of follows what happened with crude oil. It peaked in 2008 at $140 a barrel. And then you had this huge decline. And then what changed in 2020 and got me to take notice was we had a five-wave advance. And those of you that follow me know the Elliott wave theory is one of the cycle tools that I use in my toolbox to help me decide whether we're in an uptrend or downtrend. And we had a clear five-wave advance. One, two, three, four, five. So that was either one or A. And what that says is that there's another five waves coming. And then we got a consolidation for our B leg. So you get five wave advance, then you get a three wave decline or a consolidation, which is a sign of strength, which we got, and then we got the breakout. So I'm expecting a five wave advance. It looks like we're entering the third wave. So we got one, two, and now we're going into a third wave of our third wave, which third waves are the most profitable. They move the fastest, the quickest. So that's big picture stuff. Now let's take a look at this triangle, which really initiated the buy rating. And here it is. It's a 1, 2, 3 year consolidation in the form of a symmetrical triangle. After that five wave advance off the lows, it went sideways. And when we had a breakout here, I didn't chase it. I waited. I don't buy on green. I don't buy when things are up. I buy when they're down. And then we had a big down week and we kind of went sideways and I initiated here. And then it decided to go sideways for a few months, creating another symmetrical triangle. And I just held that through all of this. And then it broke out here 1, 2, 3 weeks ago. This week up 3%, even though it gave a lot back on Friday. But this isn't too bearish of a candle. These are Japanese candlesticks. So I'm expecting more upside. This pattern, if you measure the base of the pattern and you project that distance upward, you come up with about a $31 price projection. So we're at what, 25, 25 and a half. So we still have, I don't know, another 25% or so to go, possibly based on this pattern. So I'm reiterating my buy here. Now let's just take a look at the daily, just the last couple of weeks. Here's the breakout of that smaller triangle. So this is this small triangle, and we broke out of that over here. And you can see we had a gap up and then a kind of a sell-off intraday here too on Thursday, and then it closed up maybe halfway. And then we gapped down and it really sold off intraday, but it closed near the top of the range of the day. This is called, in Japanese candlesticks terms, a bullish hammer. And this is a big one, covered a big range during the day and closed pretty close up to the top. So, my stop had been, sorry to jump around like this. Here's all my stops. When I initiated, I had a stop here. And then when it moved up, I moved up my stop. And then it went, uh, and now I'm moving my stop way up to 25, which is the bottom of this bullish hammer. So, there was significant buying coming in at this level. If I see that break, there's another gap down here that might be filled. So I'm going to probably sell a lot of my holdings if it were to break 25 on a closing basis, not intraday. But we'll see. I'll definitely communicate that. I also think there's another high coming because when we hit this high, we got confirmation on our relative strength index confirming that high. We have no negative divergence or anything here. So I'm expecting another higher high and then probably a lower high on our relative strength index, which measures the underlying oomph of the move. And that would give us a negative divergence. And then I'd probably be out of this. This looks climactic, like there was a lot of panic selling into this, of course, with gold and silver being, I don't know, what was it, 3 or 4% of this index. I'm sure that added to it, but so that's where I'm at. The point and figure chart is on a buy. We have a bullish trend line on there, so I'm reiterating my buy on GSG, the iShares Commodity Index. Thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. I will also attach the initiated buy so you can check that out. Please like and subscribe. Tell your friends, neighbors, and family. Have a great evening Saturday night, and hope your rest of your weekend is pleasant. Thanks.